Hello everyone, Paul here from the Pin Academy. Hope we're all having a nice time, right? So as we're going to start the new week, I would like to mention things that you need to do or check out before you take any trade, or as you're analyzing, these are the things that you need to consider. First and foremost, you need to have the direction, or to know the direction of the market that you would like to be interested in or that you want to be involved in. Get to identify the direction. Do I want to look for an upward movement? Do I want to look for a downward movement? Or the market is still ranging, do I have to wait? That is number one. Then secondly, after identifying whether I'm moving upwards, downwards, or I'm in a range, I would like to identify the structure that I want to trade. That's the second thing that you have to do as a trader. Then thirdly, you're going to combine fundamentals and sentimentals. People use different things when it comes to those. Some of you want to just look at the calendars, what you can avoid. And coming to the calendars and the fundamental things, if you want to avoid being in the market at a particular time, you can use the calendar, set it to your time of the country you're in and the rest. Some people want to just avoid the fundamentals. Some people want to be involved. So it depends on the type of trader you are. But you must make sure that you're connecting your technicals to the fundamentals. You have to be aware when the fundamentals are coming out. Not these things of being there and you see a long candle and you're like, oh, I didn't know this is going to happen. That means that you're not prepared for the week or for the trading period that you want to trade, right? So I like using Fast Bull and also you can check it out, right? So you can check the calendar. Also, they have a lot of things now that we've introduced charts. So it's, if you appreciate the charts, you can use them, right? Now, those are the steps that you have to undertake. First, identify the direction. Then secondly, identify the structure. In the direction, there's a structure. The structure is going to be formed. So the structure gives you where you're going to be taking the trade from, the exact level, areas of interest and areas of entry, right? Then after that, you have to connect your technicals to the fundamentals, right? So some people want to be involved in the fundamentals because it's fuel to the market, or others not. I've just repeated that. Now, let's do it practically. Now, the last time we spoke about DXY, the market was having an upward direction. Remember, we're going to implement the things that I've just mentioned, right? We're having a high, higher low, higher high, higher low. We're just tested here and we're about up here, right? I'm just going to attach the video. Those who have been following, you recall that our videos are related. We don't just make random videos. So we wanted the market to react here, and then it breaks down, or from here we have to go up. Now, what happened is the market reacted, but it didn't show us a presence of buyers. So meaning that we say that if the market doesn't show presence of buyers and we break this level here, it means that now we are bearish. And you can see this was the area. Now, when the market changed to being bearish, this was our target. You can see the market hit here and we have presence of buyers. Then we have a breakdown. Now again, we're broken up. Now, as the week is starting, what are we interested in seeing in DXY, right? Let's repeat the same process. We repeat the same process, guys. You have to first identify the direction, right? You want to identify the direction. Am I moving upwards or downwards? So if you observe this chart here, what do you think we are moving? We're still moving. The structure is still downwards. So what are we going to do? I'm just going to mark the levels that the market could possibly come back to retest, right? So we have this area that the price did not test when we broke down. You can see when we broke down, it never touched this level here. Now, the other area that the price could be interested in is this area here, right? Which is very, very key. And currently we are testing it, right? So if the market breaks there, also we have an internal structure here that is in the middle here that the market broke down and never tested. So this area not tested, this area not tested. So if the market broke above here, would be coming to retest these levels and these ones here. But this is a midterm thing, because right now the market is pushing, it has been pushing on a downtrend. You can see lower low, lower high, lower low, lower high. So we are still in a downtrend. But if we break above here, then we shall be coming to target these levels that are untested. Are we together? Because if we break back above this level, it means that we shall just be having a W structure. And you know, after W, what are we interested in? Retest, then we can push a little bit higher, right? So you can see I've just first identified where the direction I'm in. I know that I'm in a downtrend, but if the market doesn't change from here to continue lower and breaks above here, I know that I want to come and retest this area, retest these untested levels. If the market loses momentum from here, I know that I'm going to continue lower. So if you're trading the dollar-related pairs, USD, Euro USD, USD CHF, USD JPY, and the rest, GBP USD and all, you have to look at the DXY. And you can see the DXY. Most of you didn't know why the dollar was a bit weak. Gold was buying and the rest. because you don't check the DXY, right? And we spoke about this in that video. We spoke about the importance of this area and the importance of this level here. If we didn't see presence of buyers here, we're interested in the price breaking. The moment it broke here, everything was bearish. You saw gold pushing higher. You saw GBP USD pushing higher. Actually, it's the next thing we're going to talk about, because also it's a follow-up that we're going to make up, right? So this is the DXY. We're expecting it can either continue from here down, depending on what happens here. You can see it's a crucial area. It was a resistance, became support. Then we broke below, retested. You can see it was a resistance here. So the moment we break above, we shall retest it and target this area. If we break here, we shall be targeting this area here. Then after that, we shall see what happens next, right? Now that's DXY. We have a clear exposure to it. Now let's check another thing that we just spoke about. GBP USD. Okay, let's start with gold, because I just spoke about gold in the recent video. It was ranging. I explained gold in depth. If you've not watched it, make sure you watch it. Anyone who missed the trade on gold, you may not just be serious, right? Or you fear the bit. I know some people fear gold, but there's no need to fear. In case you can just use a small lot size, right? I understand sometimes maybe you've lost a lot in the past days or what, but if you feel that you're fearing, just use a small lot size. Don't risk. Don't use multiple positions. Take it slow, right? So I explained why gold was going to come back to this upper point, because we're in a range. We have this high, we had this low. We had this high, then we had this double bottom. Then I explained the reason as to why we expected to push back into this level. Of course, it went and grabbed some liquidity. Now we're back down here. Now, what do we observe with gold, right? We're still in the same range. You can see this is the same high that we marked. And then we have a false breakout. Then again, we have another area that the market is breaking out from. So when you come down the weekly time frame, what do we observe? I want you to observe something in weekly here. We have a W. Remember the direction first. So what direction have we observed here? We observed that we're in a range. We're making equal highs and equal lows. Let me just change the color here. We're making equal highs, equal low. Equal high, equal low. This is a double bottom. Now, when the market created this double bottom, it created a structure here. Tested it, but this is an improper retest. So we need price to come back. And I want you to see this. So if price comes and taps into this area here and gives us a weak momentum, then there are most chances, again, we're going to come back to this bottom here. Are you seeing it? So we have this rejection in weekly, indicating that there's a higher chance that we may tap into this zone here. This is the neckline I'm talking about, this neckline here, right? We already tapped into it, but there's a possibility we may come back. Now, if you check into the daily time frame confirms that. How does it confirm? Let's do it together, right? I want you to be attentive here. I'm not just making the video so that I rush through something. I want you to understand the concepts that we've been teaching. There's nothing new I'm talking about here. I just want you to understand the previous concepts I've spoken about so that you can implement them in your analysis, always. The time frames I'm using do not matter. You can choose your own time frames, but the concepts and the rules are the same. Are we together? So let's do it together. What happened here is the market created this low by changing trend here. Then we came, retested, right? We first consolidated and then we broke down, finished that move, right? But in the process, we broke also below this level. You can see this is the low, lower high, low, lower high. The market created the higher low, then broke above. So we expected the retest here, but we broke down. But there's already a change of trend here, right? So the market went, then gave us a weak momentum downwards, created like a triple bottom almost, right? Then we broke back above and tested. So this is where we're going to start from. So we have a high, higher low, higher high. Now, after creating that higher high, we did not retest this area here, right? Instead, the market created a hidden structure here and then continued higher. So we had a high high, higher low, higher high, higher low, higher high. Now, after creating that higher high, I've marked all these levels. This is the hidden structure that I'm talking about here, right? This is the hidden structure. Then also we have this level here. I'm just going to change the color to blue so that we're uniform. So you can see we have a higher high, higher low, higher high, higher low, higher high. So let me also mark this high here. Now, if you're to observe, all these levels here were tested when we're going upwards. Besides, when we're going upwards, we have a higher high, higher low, higher high, higher low, higher high. Which level was not tested? Which high? It is this high here where we started from. It was never tested. That's why you see I have a black line here to indicate that if the market is to change trend and starts selling, I will be targeting this. This black line should be my first target because it was not tested. So that's the area I'm targeting. But before even I start thinking of the black line, what should be happening before I look for that black line. Now, we have this previous high here that the market tested. It was our last higher low. The market made a high, higher low, high, higher low, higher high. So we needed the price to come and react here, maybe give us a weak momentum and breaks so we can know we are bearish, which didn't happen. The second thing that we are waiting for is our last previous high, which became a higher low, which is also now a support. The moment we break this area here on a weekly test, we shall be bearish up to minimally this point here. This will be our first threat. So this is what I'm waiting for. Otherwise, from here, the market can still continue higher. I would be keen on that because this is a support level that is it's the last crucial support that we have. If the market fails to break this level here, we could still continue higher, right? But if also the market gives us a weak momentum and then it breaks below, it will be perfect. The moment it gives us a weak momentum and breaks with a good momentum candle here, we shall be selling straight up to this level here. Are you getting it? So those who trade gold, this is what you should be looking out for. You can even see it properly if you go to entry time frames like H4. When you come to H4, you can see we have this aggressive selling and the market has tapped into this, the last support I'm talking about. It was a resistance, became support, became also now again support. So what do we want to see? We want to see the market reacting. If it can come back and reacts here, while then it breaks below, or if there's a weak momentum, you can see I've spoken about momentum a couple of times. When you see the strength of candles that is moving a certain direction, maybe being more or bigger. I've spoken about the size of the candles and the number of candles. That's what how you identify momentum. So if you see momentum going upwards weak, then you see a good, strong candle of sales coming in, you can take your sell. But if you want to play it safe, you can wait for it to take out this level here. Then you'll be targeting this black line here. If it doesn't and creates a structure, gives us a weak momentum, then also gives us a weak momentum coming down and fails to take out this level here and breaks above, then you know that there is a higher chance. Now we are continuing higher. Are we together? So if we trade gold, this area is very, very crucial. This level here is very, very crucial. The moment it creates a structure here and breaks above, especially if it creates a structure by coming to retest here, a higher low or double bottom and breaks above it, just know that the first threat you have is here. The moment we test and react here and we break above, it means that you should be targeting 2,500. Are we together? So that's what we have on gold. But personally, what am I waiting for? Personally, if I'm to sell gold, I've just explained to you my first target is this black line, because we are still in the range. I've identified the direction for you, right? Now, coming to fundamentals next week, we don't have a lot of things to do with the dollar, right? So for me to sell, I'm waiting for this area to first be broken. But I want first the momentum. If it can give me like 2 to 3 days of not even equaling this candle here, and then we break below, I'll be selling gold up to this level here, right? But why I've gone to show you those other levels is because I know some of you are scalpers, intraday traders. So you have this level here and this level here. When we react here and get a higher low and we break above, you know that we have another level here, right? That you should be focusing on. But personally, I'll be interested in seeing either the market creating that double bottom or the higher and breaking this level, or breaking below this level after showing me a weak momentum, right? And you can clearly see it's aligning perfectly with the DXY. So if the DXY breaks above the other level, in the process of doing that, the DXY breaks above, it means also this thing will be going lower. If DXY tests the other and continues below, it means that the market will be doing something like this. So it is, when the DXY is weak, you know the dollar is weak, right? Now, let's go to another one that I spoke about in the recent time frames. This one I didn't trade it, but it was a very clear one. Now, in our last breakdown of the pound, let me just go back to weekly, was after we created this W here, right? We created this W. Of course, those who use trend lines, I'm not a big fan. I put it there because I have a team member who uses trend lines. Now, we had this W here. We spoke about it. And the last level that I said that we should watch out for was this black line here. This black line here, right? This one, right? Sorry, this one here. This is the current one that we're watching out for. Sorry. So the last one we wanted to watch out was this neckline area here of this W here, right? So after W, what do we expect? A retest of the neckline, then we push. Though we wanted it to come a little bit lower for a better risk to reward ratio. I spoke about it also in that video. I didn't trade this GBP USD. It didn't do what I wanted. or actually it could have done it when I was off the screen, but I waited for something and didn't happen, so I didn't trade it. So the neckline, we came back and retested with a weak momentum. You can clearly observe. Then we're expecting this push higher. Why? Because the DXY also had become bearish. You can check that when we're talking about the DXY. When the DXY is bearish, the dollar is weak. So that's why you see the market had to buy. Now, it was very clear when you come to daily. You can clearly see that time when we talked about it, this is where we were here. So we're creating the lower lows and lower highs and the rest, right? And then the market went and tested this level and gave us a high land and broke above. So around here, personally, I didn't see my rules to take my trade, so I did not take it. That's why I didn't take it, right? And I expected also the price to come a little bit lower, just slightly lower here, right? Or even deeper here, but it didn't reach. So when it didn't reach, this was the level I spoke about. If this level holds price tight, then we're going to look for a buy. The buy happened, but my rules didn't fulfill, right? So if you're to come to H4, you can clearly see why I'm saying my rules did not fulfill. The momentum candles that I was looking out for, the first one, the first entry I would have had was around here, which happened maybe when I was not attentive. And then from there onwards, I didn't see any rule of mine. It just kept pushing. I wasn't seeing any rule that I could have used to take the trade, right? The retests that were happening were not tapping my levels of entry and the rest, right? So you have to stick to your rules. Now that is the past, but you can see the structure is still the same. So we did have a market creating a W. We tested the neckline. Structure is clear. And then we've broken above and we have tapped into this level. False breakout. Now we have finally tested. So what do we want to see? We have a high, higher low, higher high. So once the market giving us a test here, but the way it tests is going to be crucial. So as we pull back here into the black line or even deeper into the blue zone, you can look for a short-term buy, depending on the structure that we shall see in the next lower time frames. So when you come down the daily time frame, what do we observe? We observe that we have an M that is being created. So if price continues pushing down here without testing this neckline here, this should be your target when we tap into the black line or the blue line, because we shall have an M. So whenever an M is created, we expect to go and test the neckline. So if this M is created, it's already completed. So if we continue stretching into the black line and then we change trend, we shall target the neckline. If we stretch even up to the blue line, it's even better. It means when we change trend, we shall be targeting that level here. Now, meaning when that happens, it means that in the next lower, in the weekly time frame, it means we shall, when we tap here and we go and tap that neckline or here, it means we shall be creating a weak momentum, so that then we can change trend to start being bearish, depending on how the DXY is performing, right? Why am I speaking about the DXY and this GBP USD, the dollar and the rest, and gold, sorry? Because they all have the USD. Now, I'm not speaking about Euro USD for a number of months or weeks now, because when I speak about GBP USD, they almost have the same structure. So you can, those who trade GBP USD, you can compare the structure with that one of Euro USD and the GBP USD, almost the same structure, right? So again, I missed the trade on this. So this week also, I'm going to be watching out that. So what do you conclude here? It takes us to what I started with. As a trader, before you take any trade, these are the following things. You've seen I've implemented all of them. First, determine the direction you're in. The direction we determine by, are we making higher highs and higher lows, or are we making lower lows and lower highs? That is one. Then secondly, the structure. Do I have a W? Am I trending? Have I broken a high? Have I broken a low? Am I waiting for a continuation? Am I trading a retracement and the rest, right? Then after that, connect your technical to the fundamentals. Also, in the process of connecting, you have to determine, am I going to be in the market during the news time or not? We're together? So those who trade these, you can compare with your setup. Of course, it's not financial advice. You can compare with your setup that you have, no matter the strategy you use. I know we use different strategies here and there, but in case they align, you can utilize. If they don't, then it is okay. You can also let me know where you differ. Sometimes I pass through the comments. And also, if you want any breakdown that we have not spoken about here, leave it in the comment section. The team will compile, and then we shall put them on our social media. Also, do not forget to follow us on all our social media handles. We do post the analysis, right? So the ones that we have not posted there, you'll check them out on our social media handles. Check in the description and follow us. Have a great week ahead.